Support and resistance, Fibonacci retracements, Fibs. So far, we've looked at two kinds of support and resistance. Price levels, the most popular types of trend lines. Now let's look at a completely different kind of support and resistance indicator called Fibonacci retracements, or Fibs for short. As in any financial market, Forex prices don't move straight up, down, or sideways. Instead, they zigzag within their overall longer-term trends as markets test recent short-term support and resistance. For example, in the period covered in the Euro-US dollar daily chart below, note not only the retracements within the overall uptrend, like May to early August 2011 on the right side of the chart, or October to November 2010 on the left side of the chart, but also the smaller, shorter-term reversals within these longer-term reversals. Fibs helps us determine where prices are likely to either make these repeated short-term reversals as they zigzag within their longer-term trend, or make a longer-term reversal. Definition and use. Fibs are based on certain mathematical relationships, expressed as ratios between numbers in a series. Their discovery has been attributed to, at least in the Western world, the 13th century mathematician Leonardo Fibonacci. They have application in fields as diverse as biology, music, art, architecture, and other fields. We'll just focus on what's relevant for trading. Traders found that trends tend to retrace prior moves according to these very same ratios, which in percentages translate to 23.6%, 38.2%, 50%, 61.8%, and 100% of a given trend. For example, when a downtrend is finished, as it moves higher and retraces the downtrend, it tends to pause or reverse after it has recovered 23.6%, 38.2%, 50%, 61.8%, and 100% of the prior downtrend. By drawing lines that show the percent retracements of a prior trend on their charts, traders can better predict where future price moves might stall or reverse. It's unclear why trends tend to pause or reverse after recovering these percentages of the prior trend, but they do. So view Fibs like electricity. It works, so use it even though you may not understand why it works. The proof that they work is that they've become another widely accepted and watched support and resistance indicator. As with any technical indicator, now that Fibs have become widely accepted and watched, they create a degree of self-fulfilling prophecy, and so become even more useful for anticipating price movements. Here is an illustration of how it works. If you look at the chart below, you will see an example of Fibs in action. It's actually the same chart as we saw above, with Fib levels, horizontal lines drawn in for the range of the downtrend of December 2009 to June 2010. Note how well the Fibs predict support and resistance as the Euro-US dollar begins an uptrend that retraces the prior downtrend.